Guys, it's like running a business. If you ran your household this way, if you bought another credit card or applied for another credit card to pay the interest on your last credit card, how long would that Ponzi last? Well, this is exactly what the USA is required to do because of the debt spiral. Now, I'm going to have to say it again. If you don't understand the math that I just laid out on the table for you, please take your money to a professional asset manager. And I'll have to say it again as well. If you do understand the math that I just laid out and you don't own Bitcoin, you are not the smartest person in the room. In fact, you should probably also take your money to a better asset manager than yourself. So all paths lead to Bitcoin. All paths lead to QE infinity, the necessity of the governments to continue to print money to solve the organic expansion of the debt balloon, the organic expansion being due just to the coupon payments. Incidentally, there are people that think Powell's going to get to 6%. Well, if at 3%, it's $1 trillion a year. At 6%, it's close to $3 trillion of organic growth in the debt balloon. Guys, it's fucking over. Can I not explain it any other way? This is a debt spiral that if the USA were a corporation, it would be rated CCC, one level above default and the lowest level of a continuing business in the junk bond arena. Don't forget, I spent 30 years in the junk bond arena. I'm paid to identify companies that can make it and companies that are unlikely to make it. Well, if the USA was a company, it ain't going to make it. Now, the ability to print money skates you out of a lot of problems. But if you were a corporation and you printed your own money, guess what? You get thrown in jail for forgery, wouldn't you? But in the US Treasury, if you print your own money, you get promoted. You get a bigger job because, you know, the money printing machine solves all problems. It only works until it doesn't, you guys, okay? And that's what I have to stress. Risk happens fast. It is very concerning when a major nation, the largest bank in America, Bank of America, comes to the research platform and says the US Treasury market is fragile. The liquidity is evaporating. So you ask the question, who are the buyers? At the margin, the buyers of US Treasury bonds right now are the Raoul Pal hedge funds that are using leverage. And then you hop on a podcast and you wear a fucking stupid shirt that says buy bonds because you just happen to put that podcast, you know, you happen to put that position on your trading book, but he's not going to own bonds for 30 years. You got to understand the real money that buys bonds are pension funds and insurance companies that are trying to match assets to liabilities. The liabilities meaning their insurance, their contractual obligations to the beneficiaries of their pension plans. Those are the real money buyers, okay? The fast money buyers put on the trade, they lever it up, they hope to make 1% on the bonds, and they've levered it 7 times, so it's a 7% return on, you know, a 1% allocation. Or sorry, a 10% allocation. At the end of the day, that's what hedge funds do, but they have been the marginal buyers of these bonds. Now, all of a sudden, they're like, oh, I'm a little on this one. So just remember the math.